Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording here on Saturday, the 23rd of August at about 11 a.m. Eastern Time. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
That's awesome. We are both traveling, so today's show is going to be a little shorter, and we're going to hit the highlights. The theme we were talking about before the show is we're kind of right back where we started. The week was eventful, but if you just checked in on Friday and Monday, we're sort of right back where we were. So where does that leave us? It
Mhm.
leaves us with, how do we contend with support and how do we contend with resistance? Again, that's going to be the key thing this week to identifying the next trend. So, Barry, without any further ado, I see the S&P up here. Let's take a look and see what are the key levels to watch for the coming week.
All right, let's take a look at that. Well, we left off pretty much with the 64.53 level on the cash market. And you see the 180, the 62.80 that we took out a while back in July. And if you remember, I don't know if you guys remember the whole story there, we kept banging up against it. Then, we were waiting for it to get above, got above it, retest, and flip back the next bar. And from there, we just did a quarter square without any problem, right? We just ran right up into it. And that's where we kind of stalled out. And part of the stall out, and we'll look at this in a little bit, due to the cycles coming up from the weekly charts and long-term charts. So all of that has a big meaning here. I think today's show, if you guys pay attention to the entirety of the discussion about the indices, what sort of emerges is a story about how to handle key levels and key cycles, and it's about calling highs and lows and how to manage that in a practical way, right? Okay, so that's kind of what I saw this morning when I looked at the charts, and I thought that would be a good theme to sort of follow through because we're always, either we're coming down into support or we're running up into resistance. That's just how that's just sort of life of what we do. And I think it's important to know. You always assume everybody knows, but it's good to kind of cover how to exactly trade these things and how what things mean. If something happens, it means something. If it doesn't happen, it means something. And we want to look at that. All right. So looking at the cash, this is the daily. You can see we ran up, we're pretty much, I mean, we're flirting with the 64.53 level again. Obviously, if we can get above and sit above this, we're going to take a quick shot at 66.33. So that's sort of a no-brainer because why? Because we cleared 180 and we're in good shape. We can do that. And if we fail here, obviously now we're either going to be range bound or we're going to come back and test the lows. So the key is which way do we go here? And there are some easy ways to figure that out without having to put over it. And we look at that in a minute. So that being said, let's take a look at the futures chart. This is September, kind of running out of time, right? So okay, here's the continuous chart. Let's take a look at this first. And coming out of the October lows, we are pretty much at the 360. And you can see, we really pushed against it. And we hadn't really broken through it, but we are making higher lows going into this. It looks like a sort of a hard push trying to break. And this punch Friday was a pretty good one, trying to punch through that level. And the deal here is it's a 360, it's a full cycle. And we ran out 2 cycles here at the 720 mark. Yeah, we're way past that, but we're coming up to another half square. Regardless, the 720 didn't really turn anything. I mean, we just kind of consolidate for a little while, a few days, and then ran up, right? But we're and a false break at the low. Now I think it's fairly clear what we have to do is, at least based on the continuous chart, and all the charts line up. We're looking at different charts from different angles, but they all sort of line up in a similar way. Here we have 64.70 is the key. I mean, this is the level. If we can hold above that, I think market's in a pretty good spot. If we slip below that, then we're back into the same game. Then we can watch to see if we're going to break break the lows we had this week. In the setup, you can see just looking at the two charts, if you look at the cash chart, we're at 64.53, we're right there, just breaking a little bit above it. And if you look at the continuous chart, 64.70, we're pushing a little bit above it. And if you get back to that September chart we were looking at, this is based on the score of 60. We are, we got above 64.50 and we're kind of hanging out. So this, to me, the September chart is looking kind of bullish because we got above the 180 and didn't even, the pullback didn't even get to retest that in a big way. We left a little gap here. We have a little air under it. So it looks strong. And the upside is really the half square, which is 65.68. I mean, it'll be interesting if we can do that before the contract ends, and which is not that not that long. Heck, we can hit that next week if we keep this up. So that's what we have to the upside. It looks a little. I mean, we can look at it through some other squares and see, see what else is lining up. So if you look at square 72, it still has room to run. 90, we're at a quarter of a square, so we can use that. So we're in a quarter square. We hit that. We can easily move higher. 65.68 was off the 60. So that'd be 1/3 line would be coming in there. Let me put that in so we have that, we don't lose that marker. Okay, so the dotted line is 1/3 of the square.
That's a nice target for a breakout,
It is. It's a very good target. All right. So this is sort of the frame. We're at a quarter level. We can definitely reach out a little bit more. And we'll talk about what it means if we reach out a little bit more. What else am I noticing? We talked about the 2x1 that the price has been climbing. And what I'm noticing is we got the first break of the 2x1. We've been running it for 90 days. And after the 90 days, we got a little bit of a break. And now we're running back up, right? So momentum definitely slowed down in the last, let's say, 30 days. And that's something to be noticed, right? All right. So we have, let me give you the quarter level. But let's use 65.09 because I have that on the 30-minute chart. Okay, so the point here is the highs are right around 65.09, and we would need somehow to break that and move higher. Last week on X, I mentioned how we did a 90-day cycle up by a quarter square, so we have price and time there, and we did have a little correction. The question is a 90-day run, if it really expires, I mean, obviously you're going to get more than just a few days pullback. And if it's only a few days and we take out the highs, it's probably going to run higher, right? That's not even kind of a no-brainer. We can easily run 135, do another 45, or we can do a hard 45 up under 270, which would be close to 7,000. Not saying it's going to get there in 45 days, but hey, you never know. But that's how cycles run. So if we break the 90 doesn't hold. And if we take the highs out, the 90 is not going to hold, right? Then we're going to run. If we run, of course, we had the 50%. I don't want to use this I'd use the cash for this, all the targeting, because this contract's going to be gone in a couple of weeks. It's better not to use this for all the future targeting, but you guys get the idea. We have room to run, and we have time to run right into October. So that would give us 135 from the low. And what's the bottom line of all this talk is if we blow out the 90 cycle, we're going to probably run into the 135. And that would give us some time. Typically, right? If that's, if we're looking, if it's going to continue to go higher, then that would be the next marker to look at. Can we go and make a low on the 135? Sure we can. And how would that happen? What scenario? Well, we could do a false break and then roll over, right? That's one. And if we clearly break out and we kind of hold above a couple of days, then I think we can run. This false idea of false breaks and rolling over, well, I mean, this whole, December to February timeframe was a really good lesson in being patient, waiting for the breaks and taking a shot when you have it, right? And you can see when the move came, it was worthwhile. It was a good one. I guess a practical side of watching for these cycles is not that, cycles here, I'm going to short everything or buy everything. It's knowing the quality of the cycle can dictate sort of the correction that follows. So we knew this was a big high, and 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 then we got the first low, and that was a pretty decent correction. Everything lined up, and then we got a, sort of, let's say, a lower high, and then we got the big move right into the tariff low. All right, so that's a little sketch on how to handle all of it in the next week, because we'll be using the same contract. So I think we're okay with the numbers.
And I think,
Okay.
Barry, one of the important things about that 90, like you said, the reason we pay attention and we get hyper focused when those come in is because the the ramifications based on what price does are for
Mhm.
big moves.
Exactly,
And
exactly.
they can be in either direction, as you showed. If it does another 90 up, you're talking about over 7,000
That's
potentially.
right. That's right. And yeah, it doesn't matter. I mean, markets always defy our expectations one way or the other, or most of us. So can we get there? Sure, why not, right? I can't. Who's going to argue against that?
Hmm.
And that would be sort of all the worry, real worry. I can't imagine the headlines as we get close to that. So we don't know, but what we do know is we have a 90 cycle. If we take that out, we know it can blow out into the upside. If we don't, it's probably going to do with some kind of a correction back to testing the 180, right? That's kind of how I'm looking at it, just framing for the next week. And I think that's enough. Going back to this is a continuation calendar chart. Again, you can see how everything's lined up right around these highs, right? So here, I wouldn't put a whole lot of weight on this chart. I don't use it that much, but I keep an eye on it. 65.24. It's a 50% level. It's just good to know. I look at the markets, a couple of few different charts, just so we have a good view from different angles. And here's the Dow chart. It looked like we were doing some kind of expanding triangle. And in the middle of all that, we had this zone. It was support resistant zone. And the idea was that we want to be able to hold above it. The higher we can hold above, the more bullish it is. And, we came in sort of flushed in July, low, and that gave us the potential of an expanding triangle. And then we mulled around this 44,300, ran up, and comfortably kind of sat on top and around this 44,840 level. Of course, Friday, we broke out the upside. So that was kind of like a little wedge shape here. And that took out the upper side of that triangle. Now, what's the difference here? We have the Dow making new highs, and the other guys are not. I mean, matter of fact, NASDAQ is probably the least, right? The lowest from the high.
No
So,
question, it's the weakest.
right. And Dow's taken off, and I think that should be noted. This sort of gives a little bit of credibility to the idea that, hey, the 90 cycle could get blown out. So we want to be aware of that. If it does or doesn't, it doesn't matter. But I think this is a big deal. Just like that was weakening before the big drop. Remember this triangle started developing, and we were looking for the triangle break, and it broke, and the rest is history. But it all worked out pretty nicely. So it's been a good sort of, I don't know, sort of a passive confirmation chart. So that's that. NASDAQ. Ben, you want to chime in on this? I mean, I think it's interesting. We have a 90 cycles right there, and I know you had your lines and levels. And Ben, well, the other thing is we're not able to pull up your charts because you don't have your monitors, and all the whole server setup is not with you.
That's right.
Uh-huh.
It would had to have been multiple suitcases on its own.
Right.
Uh, but no, the key thing is, as Barry said, is what we want to watch in the coming week on NASDAQ is, can we push up and take out the previous highs, or do we take out last week's low first? Because that's going to be the real important spot. I know this past week I was posting the 60-minute NASDAQ chart so people could get, sort of the shorter term view, and I'll continue doing that next week. I'll be back Sunday night, so I'll have that there. The key thing is, let's watch these, watch the low from last week and look at the high and see if we can't. Does tech continue to lag? If it does, remember tech was the leader before, so that's that tells us something in terms of what stage we're in the markets. But if we do take out the highs because the S&P does and the Dow has, it's going to rip. I mean, you can see on this chart here that Barry's showing you there's resistance just above, and if not, we can run easily a half square on this chart easily. I don't know if there's anything else you want to add on that one, Barry, but that's just in looking at this chart. I know bigger picture, when you
No,
look
I
at
think that, go ahead.
when you're looking at the monthlies, and I posted those charts this week for both the ES and the NQs, if we get above those 180s and can sit on top of that, we have a long way to go, right? We can really run
Mm-hmm.
higher.
Mm-hmm.
And if we get stuck below and can't, then we know something significant ended, which was this big up move from 2002 or 2009 lows, depending on whether you're talking about the ES or the NQ, and something else is starting, and we have to be cognizant of that as well.
Mm-hmm. Mm-hmm. Absolutely. I think that ties it up nicely. Let's take a quick look at the weekly charts. Here's the continuous chart for the ES, and the 6530 we marked off a while back, actually back in December, along with this little zone. And we got to the zone, and this was the biggest resistance I could find from a number of different angles. And you can see, we got there. We've been pushing hard right into it. Well, we're smack in the middle of it now, right? For the last month or so, we've been testing in the neighborhood. Of course, if we can take out the 6530, again, it opens up the upside. If we don't, well, that means, really big leg just ended. And when we look at the weeklies, you can see, you'll be able to see what what that looks like, and sort of the gravity of it, right? So well, this is the weekly, sorry. Looking at this, you can see the gravity of it, because if you look at the full picture, this is coming from the sort of the COVID lows, and it's been quite a run. And this 270 degrees up is no joke. Can we go higher? Well, sure. The point here is, because we had so many short-term cycles expiring here and a few long-term ones, we want to watch this to see if we can get above it. Because if we get above it, it's sort of a clear sailing again. If we don't, we can bunch up here, consolidate, do something like we did, late last year, coming into early part of this year, or back in 22, right? Late 22. Not it's going to be late this year. I'm just saying a similar pattern where we just sort of spend some time sort of building values, or distributing, or whatever that has to happen. That's if we stay under it. And this 61, 66 area looks like really good support, and structural support. So all that is, everything looks like it's ready. I mean, in the long term, it looks very good, especially if this can hold on any kind of a pullback. But now we're dealing, we're very close to this 65.30, so we have to really watch it. I mean, that's the whole point of doing the work. And at the time I said, yeah, it's about 100 points spread, but that's what we have to deal with on a weekly chart. And we're very close to it. So we'll see. That's the idea. Looking at the cash chart this is coming all the way from 2009. And just because of that, it's a bit of a big deal. And there's 360 degrees up from there. And 64.50 is the level. It's 64.40, I'm sorry. I think I used 64.50 because it was showing up on the daily charts and also the 30-minute charts. Might as well line them all up. Well, anyway, it's between 64.40 and 50. And as you can see, we're starting to really push through. And if we manage to do that and hold above, like you can see last week, we managed to pretty much open and close up here. So we can stay above here. That's another sign of, pushing higher. This is definitely, this chart as it is now, it doesn't look like it's rolling over, right? Sure, we had a lower low made this week, but that could have been just sort of a cleanup, sort of a flush, which the S&P likes to do before big moves. So that could be what that was. Any comments on the weekly, Ben?
No, I think as we're saying with multiple time frames, monthly, weekly, daily, we're at this key point,
Hmm.
and we just really need to see, what is price going to do? Are we gonna get stuck? Are we going to go sideways? Are we going to pull back, or are we going to push through and keep running? And I think the main thing that I hope people are getting from this, if we run higher, we're going to really run, right? Because it's like when we talked about an ABCD, right? When it gets exceeded, when the target gets exceeded, it really
Yep,
goes. And
absolutely.
it's the same thing with these big squares and these big cycles. If it gets invalidated or exceeded, price wise, it really goes. It's not a like, oh, we'll have a little move higher and then reverse. It's gonna if it clears it, it's gonna go.
Exactly. That's
And I
very
think
well put. That's
mentally
really
we have to
the
we have to be prepared for that mentally, right? Not to get acrophobia and fear of heights, because if it goes, it's gonna really go.
yeah, and it's worthwhile. And that's
Mhm.
really the whole point. I mean, that was a theme. You summarized it nicely. That's really the key. And I think, so many words I was trying to explain, that's exactly what it is. And now we have all those levels. All right, so let's take a quick look at our 30-minute chart. And you can kind of see, I mean, I love the 30-minute chart. You can see what happened. This was a flush. So the flush we got on the 20th. On the way down, we had this, we were watching 64.77, see if we can hold above it. We really couldn't. If we did, it would be stronger. Market would go higher. Couldn't really do that. 64.56 held for a little while, but you can see how 77 also held. So eventually got pushed lower. Couldn't hold 64.32, and that knocked it all the way down to almost 63.50. Didn't quite get there, which is good. That's sort of positive sign. Basically we were challenging, all the levels on the way down. 64.32, couldn't quite get there. Then we flushed lower towards 63.50 again on the Globex session, and we started to move higher. Then we started clearing level by level. 64.9 cleared that, and I was talking about how 64.32 is major, or was major resistance. Now it's support, and it would take kind of a punch to get through it, and not to sort of grind through it because it's so heavy. And look what happened, right? We had the news come in exactly at the right time. We punched right through it, cleared 64.56. That was no problem. So we're above, and you can see this little flag that's forming, very bullish. Um, Not very bullish, it's bullish. It's above, it's holding pretty well above 64.77 and just a heartbeat away from 64.99. And we can, I mean, if we can hold above 64.77, I think next stop is really 65.22. And that 65.22 lines up with some of the numbers we were looking at daily and the weekly, right? So far as the 30-minute chart goes, I think if we can hold 64.77 and start moving higher, we clear 65.22, well, that opens it up, right? That opens up the opening that we're looking for will show up between 64.99, let's say 6,500 and 65.22.
I'll tell you,
So
these levels are fantastic. I hope people are using them because they really give you the clues as to what the bigger picture is doing, right? This 30-minute level start giving way, things are going lower. When they start giving way to the upside, things are going higher. So watch those levels on the 30-minute.
yeah, they definitely help, no question about it. All right, let's move on to the rest of the charts. Since this is a vacation special, it's going to be quick, but not much, a whole lot to say either. Bonds pretty much in the same place. We're still below the 45, and perfectly going sideways. We want to see some movement before we get on it. I'll do the daily charts and then we'll look at the now. Well, let's do it one by one like we normally do. Take a look at the bond weekly. So we are sitting on top of our 114 level perfectly 2 weeks in a row. We dipped a little lower, but we're kind of hanging in there. I think for bonds, if we take out this week's low, it's gonna be negative, and we could be starting to roll over a little, go lower. Of course, if we take out this week's high, we're still in here. We're still stuck in this, stuck in the range, weekly range. Not much to do there. Crude oil, crude came back to the 61.61 level, as you guys can see. And well, now we're in the bottom realm. And we talked about it last week, or the week before. If we take out 64.75, we're going to be back in this range. Testing structural support is there, and looks like we're consolidating. But I think crude. Let me put it this way: if we take out 64.75 this time around, that might be the last time we see 61.60. So watch out for that. If we do that, then something just got started. But because this looks very bullish to me, and that's that. So here's the crude again. Where we dipped a little below. It looks to me like very much like a flush. And here's square 72. You can see we came down. We not squared out. We found support on the 72-degree level. This is a weekly chart coming from the 22 high. And here's the thing. Let me zoom into this a little bit. I was going to talk about crude a little bit more this week. So we've been coming lower, and then we had this little bump, around in June. And not to, slice this too thin, but if this should be a high, it was an ABCD coming down, right? A, B, C, D. If the ABCD, then the C high would be a swing high. And in June, we took that out. So we have a higher high compared to the last week, right? Last swing high. And if we can hold above the low we had back in May, we would have a higher low. And all this is happening at the 72 degrees down from the 22 high before all the stuff happened in Europe. So to me, this looks like it's time to really watch it closely. We're also 180 degrees from that high, 180 degrees, 180 weeks from that high. I think it's time to take note of oil. Not that it's all going to explode next week, but we want to watch that setup I'm talking about here. We were able to take out the high in April, and if we can maintain the high low that we got in May, this thing's starting to set up, and it might be worthwhile to trade that. So that's my little bit deeper insight into crude, and I think that's enough. Let's move on to gold. Gold daily. Well, we had a break, looked like a false break. We came back down, held above 33.38. We're above the trend line. We're floating along the 34.30 line. Well, everything, I think it's just fine. As long as we're holding about 33.38, it's bullish. Let it consolidate. You can see it's doing a solid consolidation here. We got good higher lows coming in. Gold looks okay. Trade it as you see fit. If your system is giving you the setups, take them. Here's the weekly. Again, it's holding well above the 32.94, consolidating, and it looks very positive. So not a whole lot, anything negative to say about that. Same thing. We held right around. We dipped a little below 37.70, but we held. But for the most part, we held above 37.70. Now we're, looks like the key area is here above 37.70 and 40, consolidating. Again, it looks good. Really don't have anything negative to say. I'm always wondering, what it means. And like we talked about last time, the weekly, yes, we tapped out at the 90, had a little bit of a correction, but we're holding above the midpoint, doing pretty well. We'll watch it. We'll continue to watch it. It looks bullish. It looks good. Even copper's starting to make higher highs and higher lows, trying to get above our this 50% level at 447. We can do that. I think it'll stabilize and start to move higher. That's good. Copper weekly didn't quite get to the 144, so there's some life left in it. I mean, the correction was humongous, but you can see the trend lines are holding, everything's holding. So let the shock be absorbed and dissipated. And I think then after that we can move on. Bitcoin, there was a high that came in with the cycle, and then we pulled back, had a false break. Then on this day, also called for a high and lower prices. We got that. And now we have lower lows and potentially lower highs. So Bitcoin looking a little weak. Looks like the cycle came in. This is not dropping much because we have structural support here, but we'll watch it. We're watching it closely. if these lows hold, we can have a little bit more upside. We could consolidate a little bit more. But overall, these highs really not, took the breath out of it. So it looks like it might take a little longer. If we start taking out, like let's say Friday's low, then this is starting to look negative again, especially if we take out the low on Thursday. So watch for that. Getting on to the dollar. So far hanging by the nails, right? So far we have higher lows. The low looks pretty solid. 97 is the key level. It would be okay for you to come and test that before moving higher because that would, solidify sort of the lows. I'm okay with that. And if we look at the weekly, the 144 square is undeniable. So that's my guess is that's solid. We just have to let this correction finish up and start moving again. And the finishing up part and the consolidation or testing the lows might take a little longer, but as long as we hold in here, timing looks good. If the timing holds, then we can expect a nice move back out of here. So that's the bottom line there. Okay, let's move on to the euro.
This may be where the real opportunity comes, huh?
I think so. We have to because moving down is much faster always, right? So let's see how it works out. So far we're kind of consolidating. We have the lower highs settling in. And I think the key here is the 3/4 level. It's at 1796. As long as we're below that, we have two highs above. And I think this week's kind of critical, mainly because we sort of straddle the 50% level at 1649, 1650, let's say. And if we hold above this 1650, we could easily consolidate a little bit more. Maybe we'll pop a little higher. But watch it along with the dollar. We'll see what happens. But I think next couple of weeks we're gonna have to watch this closely to see if we turn around.
Mm-hmm.
So that's the daily. Moving on to the weekly. Pretty much the same thing. We came up to the 108-degree level. We're kind of straddling that. We're moving around it, reverting around it. 1656 is the level. And along the same lines with the daily, I think we'll probably spend a little time here. But even if you look at the weekly, you can see we're starting to make, the lower lows and lower highs are starting to make some sense. The key question is, was that a pullback on an ongoing uptrend? And I think this cycle expired, so we're done with that, and we're waiting for it to finish up this for the next retest of the highs, and that's how I would talk about the euro. Moving on to natural gas, just to take a look. Not much other than a lot of weakness. I was thinking we could hold above 298 and stabilize, and that would get us some kind of a move higher. But for now, maybe it's seasonal. Natural gas is pulling in for a dip. And if you look back, last August, we came in for a dip, and so that might be what it is. But 153 was the big support level, so we might get there. We'll see. But for now, not much to do. I think there are other markets to trade. And looking at the Hang Seng, it's been bullish. We talked about as long as we can be above 64.86, we're looking for a stronger market, and with the target at 26,240. Now, looking at the Hang Seng, interesting to correlate that with the things we're seeing in the S&P. It's pretty much the same thing, right? It's hanging around the highs. Didn't really break down, even with all the whatever is happening fundamentally, and the trend line is holding. So I think there's the trend line. It's a pretty tight trend line. So this thing is shaving pretty close. Now, if this is holding and we hold and we continue higher next week towards this 26,240, I'm expecting our markets will probably also move higher. I can't imagine Hang Seng going higher and the S&P not going. So I think it's another little tie-in to watch, another little component, kind of like how we looked at the Dow making new highs. So I'll end it with that. Anything you want to add to all this?
Just that we're in this critical spot. We've hopefully helped identify the levels for you. And then now we just react. When price clears a level, we react either above or below. We got to react, and we have to be flexible to know that, you could be going in there thinking it's bullish and it comes out bearish, or you could be going in there thinking it's bearish and it turns out bullish, and you just got to be ready to react and adjust.
Well, that's where, watching these levels will help people, because once we get established above a certain level, any signals that are kicked out um, by your systems will have a higher probability of working in that direction. That's the idea, right? That we try to
That's
drive home.
absolutely right. Yep.
Mhm. So if we get stuck below these levels, well, it's like sell signals will have a higher probability, and if we get stuck above these levels, the buys will have a higher probability, and that's that.
Yeah, don't be blinded. I guess the main message is don't be blinded to 50% of the probabilities, which is the other direction.
Hmm.
Be open to both, and then the opportunities will present themselves and you'll be able to react.
Yep, I think that's
So
it. That's it for me. Do you have anything
yeah.
else?
No, just in general, the commodities, we saw some decent action in the grains this past week. So they'll
Hmm.
keep an eye on the grains. They're in various stages of bottoming. Coffee's been stellar. It's just been really, really kicking butt.
Right. Call that out a while back.
Yep. Yep.
Hmm.
The sugar is the next best one. It's sort of, it's got the higher lows, it's got the higher highs, hasn't taken off yet, but it's preparing for the same type of move. So there's money coming into those commodities. Let's just watch them, and as they set up, we'll take advantage of it.
Sounds good. Sounds
And
good.
that's it. Otherwise, have a great weekend, rest of your weekend, everybody. We'll both be back in the saddle next week. We'll have our regular show and have the daily posts and everything. We'll talk to you next week.
Thanks, Ben. Good job. And have a safe flight home. And you guys rest up and catch you next week.
We'll see you next week,
All
everybody.
right. Bye bye.
Bye bye.